Okay, so today what we will do is we'll go through what we should do to trade. First of all, I will keep this for a minute. This we call risk warning. I want everyone to read it. I will read the first sentence. Trading in price CFDs and other derivatives is highly speculative and carries a high level of risk. It's possible to lose all your capital. If any logical person hear this sentence only, he will just leave now. He wouldn't stay in the room. Why? Because I might lose. Why would stay? Because it is a possibility. I can lose, but I can win. So that's what keeps us all in the room, that we are having this possibility that I might win, I might lose. Sometimes when we are becoming so good in this, we forget. It's just prediction. It's just possibility. No one knows for sure what will happen the next BEP. Who here know what a BEP is? Please raise your hand if you know what a BEP is. A BEP. What is a BEP? Raise your hand if you know what is a BEP. You don't know what's a BEP? You have a trading account, a real trading account. You don't know what's a BEP. I admire your courage. It's not a tricky question, it's a very simple question. The smallest move of a price is a BEP. It's the price steps. That's we call a BEP. For example, what you trade? Gold. So, for example, when gold price right now is around, if I'm not mistaken, $2,916 per ounce and some cents, like 70 cents. The 70 cents that became 71, that's a BEP. That's one BEP move. For example, if you trade like euro dollar or pound dollar, it is usually 4 digits after the dot, like 1 dot, 4 digits. The fourth number, the last number on the right, when it moves up or down, one number, that's a BEP. So it's the smallest amount that the price can move. How usually you trade in gold? How you take your decision on buying or selling?
I'm telling only last 6-7 months.
Great, that's a great time. Like when I open now the MetaTrader in front of you and I ask you how you decide whether to buy or to sell.
The market is selling, some days market is up, market is up going.
So you're using the price chart.
Yes.
This is technical analysis. Okay. If someone is like here, how you trade? What you do?
Okay, I'm using many types of analysis, like I'm using Fibonacci.
Okay, that's another way of technical analysis.
But it's
Very advanced tool. Fibonacci. Who here know what is a Fibonacci tool? Doesn't know. You don't know or you know?
I know a little bit.
What do you know about it? Tell me.
Basically, you analyze the price chart according to the Fibonacci numerical sequence. So I don't know how to explain.
It's a ratio. This is what I'm trying to say. It's a ratio between the prices. Actually, Fibonacci is like very famous Italian mathematician who took some things from the old Arabian numbers. You know that the Latin numbers we used to be the Arabian numbers. He took it, and he also took what we call the Fibonacci ratio. It started very far from trading. It started as something we notice it's there. We find this ratio between things in nature. So he took this thing and he started to make the sequence, the Fibonacci sequence, which is 0, 1, 1, 3, 5, if you know the numbers. And between these numbers, there is a ratio. We'll speak about it. But anyway, so technical analysis, any other way to determine how we predict the price, how we know what will come next. News. This is fundamental.
Yeah.
Okay, so what we are speaking about right now, technical and fundamental, that's mostly what happened in the market. So, for you, sir, for anyone in the room, you have to have the steps. Maybe you don't know it, but in the back of your mind, you have the steps. You already have this like trend following or something. Even if you don't know the name, like the gentleman here. Can I know your good name, your first name? Mr. Rayan, he knows the Fibonacci, but he said very good. I cannot explain it to you, but I know it.
No, because I don't trade, you know, so I can't explain you properly, you know.
Ah.
So I studied it. I know what is the Fibonacci sequence in theory.
Yeah.
I saw it on the
Chart.
trading view on the chart, but I'm not a pro, you know.
Exactly. If you keep this in mind, even if you learn it for years and you always treat it like I'm not a pro, I'm just using it, learning it, you will always protect yourself from the ego that come to traders when they know more. We should all agree before we start anything that whatever we are doing, nobody is a wizard who know everything. That was the statement when I say nobody will know 100% sure the next step, the next very small. Even Jerome Powell. Who here know who is Jerome Powell? Jerome Powell. Who? Okay, this is the Fed chairman or the Federal Reserve chairman. So you start by knowing the fundamentals. When you trade, sir, you didn't tell me like how you trade, like technical, fundamental, how you trade, how you decide.
By the chart itself, straight.
Is what?
Only by the chart.
Chart, no, technical analysis. Okay, so even if you don't use the fundamentals, if you can read the statement I'm starting with, is you need to know the fundamentals. Here I'm not saying you need to study or to use or even to believe in. You just need to know. You have to have this idea what's happening right now. After 21 minutes, something will happen. Do you know what is? Okay, there is a major news from Canada. So this news will affect the market. You see in your chart, you trade, what's the time you usually trade in? Like this time or at night or in the morning? What time you trade in?
New York time.
New York time. Usually this time is the high liquidity time. You know why? Because the biggest market is there, right? So sometimes 2 a.m. or 3 a.m. Dubai time, you find very big moves. Why is that happening? Is what? Okay, if there is any measure happening or a news or release, this will make volatility in the market. But most of the time, the US market have this major news. But like today in the early morning, we had very major news also from Australia. We have the interest rate decision. This is very important news. From the fundamentals, even if you don't use the fundamentals or trade the fundamentals, you need to know 3 important things about the fundamentals. Like every economy has one goal. What's the goal? To make the normal person happy. That's it. That's actually the goal. You are smiling.
Yeah, very idealistic. It should be the goal, but it's not the goal.
No, actually, it's there. It's the goal. Maybe not all the countries is doing something, but this is actually the goal.
Yeah, it should be, yeah.
Because of this, they have some measures. How we know that if the citizen is happy? We just go to him and ask, "Are you happy?" Here in Dubai, sometimes they used to ask, like, "Are you happy?" But there is actually some measures, some numbers. There is 3 main numbers that tell the government, that tell the people in charge that the citizens are happy. 3 numbers. The GDP. Who knows what's the GDP? Gross domestic production, like the inflation and the employment rate. These 3 things determine if the people are happy or not. Employment is like if someone having a job, he has an income, he can go like shop, he can go travel, he can buy things he likes, he can do so many things. If he lost his job, what do you do? What's the first thing you do? You cut your expenses. I will cancel subscription to this fancy things I'm subscribing in. I will not go to this trip. I will not buy this fancy perfume. I will reduce my spending. This will affect the economy. So the employment is very important because of this. The GDP is important because the GDP actually, very simply, is how much the country made during the year. So if the country is making more, it would distribute more to people, so people will have more. The third and most important is inflation. This very small word affects everyone. Like if someone buying this bottle of water today with 1 dirham, like it used to be like 50 fels, like half a dirham before. This increase we call inflation, like increasing in prices. It happened, it should happen within a range. It shouldn't be more or less of this range. So because of the inflation, when it happens, the government usually takes some decisions. The most important decision is the interest rate. Who here know what is interest rate? Like in the bank, give you money, percentage, this is interest rate, right? So how this rate is decided? It's actually decided based on the inflation. So if the inflation go higher, meaning prices are going higher, the country, the economy doesn't like this. He wants the prices to go down. So how the economy convince you to spend less? It gives you money. No, it gives you money to keep your money away from you. You have this $10,000. If you have it, you just think like, I will go there, I will go here, I will spend. No, so the economy wants you to give this $10,000 and say, give it to me for a year, and I'll give you back 5%. So you think maybe next year I will do the things I want to do, I will enjoy also the 5%. So you will reduce your spending. How this will affect inflation? You will spend less, prices will go up. So from inflation, we went all this circle. There is also circle started from the prices. So sometimes the economy doesn't go to you, it go to the shop. How much is bottle of water? It's say 1 dirham and 10 fils. Wow, it's increasing. Why is that? Because the prices are increasing because we spend more. The inflation actually can be like resolved in a very, very simple 2 steps. Work more, spend less. Work more, spend less. That's it. That's the solution. But inflation for all economy is a monster. They dream about it at night. How we can control inflation, how we reduce inflation. Because of this, there is one major news. So I told you like three things, 3 pillars of the economy. We don't have any chocolate? I can bring back, okay. So, anyone remember what's the 3 things?
GDP, inflation.
And employment. Okay, 2 out of 3. Let's go through it. What's your good name, sir?
Danish.
Let's go through your Danish. So, this 3 things is the main economy goal, or its measures.
NAP,
What's what?
NAP.
Okay, I was just about to tell you, like, this is the 3 main measures. Below each one, there is subcategory. For example, I said employment. What does NFP stand for? Non-farm payroll. It's employment. It's very important index, but it measures employment. It measures how much jobs we added apart from the farming jobs. So that's why it's very important. Actually, NFP comes, you know when it comes? When?
First month, first week.
Okay.
Somewhere Friday or something.
Yeah. Friday?
Friday.
First Friday of each month.
Yes, sir.
This is, so for you, sir, or any person who is just trading the technicals, you need to know this. Like, you don't need to use it, but you need to know, like, 5:30 each month, each Friday, first Friday of each month, there will be major volatility. I don't believe in fundamentals, I don't need to know the numbers, but I need to know the timing. The news will be released at this time. This is what I mean by know the fundamentals. You need to just know it. Some people actually only trade by the fundamentals, and some trade by the technicals. You do whatever you like, but at least you need to know the fundamentals. Okay. So today, for example, we have the very major news from Canada, which is the CPI. CPI stands for Consumer Price Index. The CPI index is released from each country, all of your countries. Where are you from, sir?
From Sri Lanka.
From Sri Lanka, there is CPI released. Do you know about it? If prices are increasing, someone measure this and provide this to the economy, to the government to know what is the prices. In major currencies and big economies like the US, like Canada, like Japan, this number actually is very important to everyone. Not only the people in Sri Lanka or the people in Egypt or people in Emirates, because this number will affect the whole world. What is the most traded currency in the world? US dollar. So any news regarding the US dollar will affect the whole market. So if you are trading US dollar, you need to know the other side, because we have bears. Like US dollar cannot be traded by itself. If I go there to Al Ansari and say, how much is the dollar? He will assume that I'm asking about the rate of the dollar against the UAE dirham, because I'm here. If I'm in the UK, he will assume that I'm asking about the dollar against the pound, if I'm, and so on. So the dollar cannot be traded by itself, but it can affect 80% of the market. Today, also we have the news from Canada. The Canadian dollar is very strong currency, because Canada is very strong economy. It provides oil to most of the world, and actually we have a very major currency pair, which is the USD against the CAD. So first of all, you need to know the fundamentals. I'm going in hurry just we don't want to miss the news. So this behind me, this the cycle. Maybe have you seen this before? Did any of you see this before? This is the economy cycle, or the market cycle, or the business cycle. Every business, if some of you have his own business, it has this cycle. You go for some time, things are going good, you are doing great, and sometimes you are doing, that's actually, nobody goes like this. And no prices go like this, like an arrow. Everything moves like this, okay? So for the economy, all these measures tell us, where are we now? Are we here, or are we here, or are we here? Okay, so if we are going up, we will have employment at max level, we have inflation at a lower level. Sometimes the index, or the number, the lower is the better. Sometimes higher is better. For employment rate, the more jobs we add, the better. For inflation, the higher number we have is actually worse for the economy, but good for the currency. I'll repeat this again, because we will trade actually this right now. We will have the Canadian CPI, the Consumer Price Index. This number is predicted to be 2.5%, meaning that the market expects that the numbers, the products prices increased by 2.5%. Okay, so what will happen? It expected today, it was 2.5, it expects today to be 2.6, to increase from 2.5 to 2.6. What will happen if this number become 3%? Is this good or bad for the Canadian dollar?
Should be.
Actually, what is the meaning of the number? Meaning the prices, this measure, CPI is measuring how much prices are increasing. So if it's going from 2.6 to 3%, this means the prices are increasing by this measure. So this is actually bad for the economy. You will go buy something, it's much expensive. But because we as traders, and by we I'm not saying we in the room, like we is like hedge funds, big banks, the billion dollar owners, we know that the central bank of this country will not leave things like that. They will move, they will do something to decrease or control this inflation. So this will make the country increase the interest rate. This equation, no one can control. It has to be like this. This is like 1 + 1 = 2. When inflation is going higher, the government, even in the US, even in the UK, even any country, it has to increase the interest rate. It has to. When the interest rate increase, meaning people will come to the banks and put their money because they will have more interest rate. So actually, CPI higher is bad for the economy, but good for traders. They want to buy this thing which has higher interest rate. So today we have the USD against the Canadian dollar. So if the numbers came higher, this will make the Canadian dollar stronger in front of the US dollar and all the other currencies. So this is the fundamentals. For the technicals, who here have some technical analysis knowledge? Okay, like trend, you know what's the trend, you know what's the support and resistance, you know all that, right? Yeah. Okay, so for example, I want to go now to the live chart, but let me just very quickly. You know what's this? We call it RSI. Raise your hand if you know it. Okay, just it tells you how much the market is buying or selling. The higher the buying, we are here. The higher the selling, we are here. So this measures the pressure of buyer and sellers. This we call the MACD. Raise your hand if you know what is the MACD. Okay, simply it measures the movement of the market. How is the volatility going? So when it's very volatile, these bars are very strong, like you see. When it's lower volatility, it's very small. And when the volatility is going to the uptrend, it's above this zero line. And when the volatility is going down, it's below this. And this is just a moving average of the numbers. Who knows here what the moving average is? Everybody knows what the moving average is? And this is the actual chart. And this is what's this? Who knows what's this? What do we call this? Huh? Bollinger Bands. Okay, so this is actually some moving averages. Mr. Bollinger assumed that his bands will contain the price. So this will be support, this will be a resistance. Everyone here knows what's support and what's the resistance. So for example, this is a technical analysis chart. Maybe I don't know what is that. Who knows what is this chart representing? Do you know? Somebody know?
Google.
Where? How do you know it's called?
The price.
900.
That's good, thank you. But the technical analysis, maybe you, sir, and everyone who is believing in technical analysis will say, I can analyze the chart, even I don't know what is that, right? Bought anything, bought the toys prices chart, I will analyze it. Because just the prices, I mean, like price, action, discounts, everything, Mr. Lau said this, okay? So this is just a technical analysis chart. It assumes that if I am here, the momentum is going to buying. If I'm, most people use this below line, 30 line, to be like the pressure selling, the selling pressure will reverse. Actually, this is not the case. Like most of the time, you'll have this for much time than you expect. But what I can recommend you, below 50, you are going down. You are still in the downtrend. Above 50, you are in the uptrend. Okay? MACD is very clear. Above is buying, below is selling. It's not very simple like this, but just major idea. So, risk management. This is the most important thing. We spoke about the technical. We spoke about the fundamental. Who here know what is risk management? Please raise your hand. Who here doesn't like risk management? I'm raising my two hands. I don't like it. I don't like it. You know what else I don't like? I don't like to wake up in the morning. I don't like to take my medicine if I'm sick. Some things you have to do. You don't like, but that's how it is. You have to do it. You have to do it. So risk management is something nobody likes, but you have to do it. I remember vividly this phrase, and I keep saying it to my friends and everybody I try to speak about trading. This phrase said, your goal as a trader is only to live to trade another day. This is your only goal. Some people, like me, like to make profit. Some people like the adrenaline, like the things that happening, see, I expected and it happened. But this phrase is just saying that if you really are into trading, your goal should be only to live to trade another day. Meaning, don't let this day kill you as a trader. Don't let it wipe you. Think how I can live tomorrow to trade. So today I was expecting this move. I was doing everything. My technical analysis was perfect. I even was in profit. But then the price made the bad thing. Just turned out on me. Don't go and revenge. Your goal should be left to trade another day. So because of this, we say like, I know these things nobody would do, okay? I have to say this, but even me, I don't trade like 1-2%. I know this is just by the book. But at least you should have a percentage. How much I'm going to risk. Even if you are risking your account, whole account, you should be like a fox. You should hide something from the market. Hide something. Don't put all your money on the market. So someone say like, if I'm not using leverage, I'm not taking advantage of this service. Why I'm going to a broker? If I want to buy gold, I just go buy jewelry for my wife, and that's it. Gold will go up, and the gold prices will appreciate, and that's it. Why I'm buying gold here? Because of the leverage. I can buy more with little. Who here know what is leverage? Everybody, right? So you don't know what's leverage? You shouldn't trade if you don't know. You know it, right? Okay. So leverage is very risky, but it's powerful. So we should use it, but with cautious. So I say you have to have a percentage and you have to have a stop loss. I hate the stop loss. I know you hate the stop loss because most of the time you see the stop loss hit, but then the price go to your direction. Okay, we would cry, all of us right now. It happened to all of us. But sometimes, and you saw it, I'm sure you saw it, sometimes the price hit the stop loss and never even get back to the stop loss. It's like you are buying stop loss here and the price go like an arrow. Or the vice versa. If you are like, someone is selling gold from 2,470. He's still right now in this position. In a selling position of gold, $2,470. How much gold is now? It's more than $500 above. He still believes that, okay, for him, I'm not saying any bad thing, but I'm saying if he have a stop loss, he wouldn't be married to his position. Some people just like stick to the position. So anyway, we have to have a risk management. Any question before we start the live trading session? Okay. So today what we will have is the news is the CPI, the monthly CPI. If you can see my screen, can you see my screen? It's visible, yeah. So this is the CPI. The forecast is 0.1%. The previous was minus 4%, meaning the prices was actually decreasing, not increasing. The forecast is the most important thing. So 2.6% is expected today for the yearly. Let's not waste more time and go for the chart. The news is actually will be getting up. So what we will do is, this is a live example on how you should be trading anything, not the news, like anything you want to trade. You should be just having know that the fundamentals, know the technicals, and then go to the chart with mind, with a plan. Now we are witnessing the news. Let's say we'll just, before even the numbers came, you see the moving now, right now? What's happening? This is what? This is the US dollar here in the left and the USD CAD in the right. So who is going down now? It's the US dollar. So this is the USD CAD going up. So even before the news, I know now the news is coming positive. It's actually very positive. 2.7% to the yearly CPI. Someone before you know this because you are using only technicals. You don't know. Even if you use the fundamentals, you wouldn't know. He would be before you. What can I do right now? What a logical person should do?
Wait.
I would clap for you. I would clap for you. Most people don't wait. Most people either buy or sell. But actually what you should do is you should wait. You can, before this candle, and excuse the word, you can gamble. This is not trading. This is gambling. This is like, if someone of you like used any gambling thing like a roulette or blackjack or something, just you don't know. You just put your money and say whatever, right? Here people do the same for the news. Just buy or sell without. Sometimes this is not gambling. Sometimes like I have my analysis, my technical analysis even before the news. This is an uptrend, for example. This is a clear uptrend of the USD CAD, and this is like a peak or. You can see here some price action. You see these candles? You see these candles?
Yeah.
Actually, if you treat candles like it's a language, it's not, this is the Japanese language, candle actually is a language. It's telling you what's happening. If you see, have you seen a real trading floor before? Raise your hand if you saw. It's crazy. You cannot even hear anything. Everybody's here. It's like a normal market where people selling like fish or meat or something. It's like that. It's chaos. Everybody's selling and buying at the same moment. Everybody's yelling. That's what you see here in a quiet room, like we're in. But you see that this is actually, and I'm not exaggerating. This is people losing their jobs. This is people actually losing their lives. with this movement. This is not just price moving on ticks and bips. This is things happening. This is real things happening. So you need to understand what is happening right here. What's happening is there is major news in the CAD, and this is the USD against the CAD. This is the US dollar against the Canadian dollar. The Canadian dollar, when we go down, this means the Canadian dollar is going. Huh? Someone said down. Sure? Okay. So this me? You? Who said down? When it's like that. When it's like if I reverse this screen, like move it upside down, it will be the Canadian dollar against the US dollar. But we don't have this. The major currencies, the bears, it's like that. Like this is the name of it. Like this is Islam Ahmad. You cannot call him Ahmad Islam. It's like this. This is the USD against the Canadian dollar. You cannot reverse it. So when the Canadian dollar is going stronger, this goes down. So right now, we should actually wait, but we can do something after waiting. Without the news even, we can do some analysis, like this is a peak, the candles here are very clear. From this candle, what time frame is this?
4 minutes.
This is 5 minutes short. So before the news, because the news was 5:30 short, I have indication here to do what? Sell. What my stop where? Here, right? In this trade, can I know for sure 100% that's going my way? Can I know? Can I know for sure it will not go my way? It's 50%, right? Can I do the same now? Yes or no? Can I take a sell from here, from the point we are here?
No.
Why not?
Because
I'm asking, I'm not,
I understand that.
I'm just asking you. Tell me your point of view. Because what's happening right now is what's happening actually in the real market. And this is what, if I'm trying to use this time to give you some valuable things, is I'm giving you something you use when you are not here with me, when you're alone. Like, if you see this chart right now, and I'm pushing you, you should wait actually, but I'm pushing you, like if you are working in a company where you buy or sell, and this is a share or something, you have to take a decision buy or sell. What would you do?
Why?
Why?
It's already connected to the last resistance for the support.
Support.
So at the bottom, the support is already hit. Now it's going to hit to check the top resistance, and then eventually again, maybe after 30 minutes, it's going to go back up. Until it is very strongly rejected from that first red candle to the top. If it is not rejected from there, then it's going to go up. If it is rejected, then it's going to go back up.
Okay. So you're going to buy?
At this time, I'm waiting.
Yeah.
I told you.
But if I force you, you just buy.
Then I have to go to buy.
Where your stop loss will be? If you buy from here, where your stop loss will be?
Eventually on the top of the last wick.
Here?
Yeah, on the
So
top, on the
you will
top.
be selling or buying?
If I'm buying it,
Uh-huh.
oh gosh, it's different.
No, I'm asking you. What you will be selling or buying?
No, if I buy it, then it's difficult to have a stop loss. It's too big.
Okay, I'm forcing you. This is just a masood. I'm forcing you. You have to take a decision now. Buy or sell.
If I buy it now, my
Don't
stop
say if.
Okay.
I'm asking you right now. It's an MCQ. It's
Alright.
yes or no. It's
Okay, I purchased.
buy.
Okay.
Where would your stop loss be?
From the Fibonacci of this, the big candle,
From this one?
this Fibonacci up to the 50% of it.
Okay. So what you are saying is you will have the Fibonacci retracement or expansion?
No, retrospect.
Retracement. Some of us have a different.
No, quick progress.
So you buy and you put stop loss here.
Yeah.
Exactly, right?
Mm.
where your take profit will be?
Oh gosh, again. It's very small.
Very small profit or?
No, the profit is very small. If you want to do the expansion, then only I can tell you the profit.
Okay.
If we take
We just bought your. Oh, sorry, I have another trade. I can have to close this. Don't look at it, okay? Don't envy me. This is a demo account. This is not real, okay? It's not real. Anyway, this is a trade we open right now. It's actually in profit. But what's wrong with this trade? Can you tell me? Look here, look here. I didn't what?
stop loss and take profit.
There was
no risk.
What I did is, I did what 90% of traders do. I just bought. Here, I didn't put a stop loss or a take profit. Actually, I bought a stop loss, but I didn't put a take profit. This trade will close in one and only case. What's that? Who knows?
Margin call.
Exactly. This trade will only be closing a margin call. When I opened the thing before, there was a trade here. I closed it by my hand. Okay? There was a take profit and stop loss and everything, but I choose to close it. This one, it wouldn't be closed unless this is a margin call. Who here know what's a margin call? Come on, you know what's a margin call. Everyone here knows what's a margin call. Okay, actually, what you really know is not the margin call. What you really know is the liquidation. Margin call is an alarm that comes to you before the liquidation. It tells you you don't have enough money. Simply, the broker or the company telling you, we are giving you liquidity, you are putting a margin with us. We cannot lose a single cent. If your trade is losing, you either need to put some money or we will just close it at this stage. So most of the time, because the volatility is very high in the FX market, we just, even the alarm like in minutes or even seconds, the lot or the things you are open, even all your lots can be liquidated like that because you don't have enough money to cover it. So this is the first thing you shouldn't do. This is the second. First thing is what I did with the gentleman, you shouldn't do with yourself. Actually, what I did with you, most traders do with themselves. Like, I don't know what to do, but I have to. I have to buy or sell. Man, you don't know. I have to. I have to be in the market. There is a news, there is major move. I have to be there. I was like, he was very wise. Like, man, what should I do? It's like, logically you're thinking, there is nothing I should. Inside your mind, there is this logical person. At some time in the heat of the moment, the bad guy who is me could take control. Like, you have to. I don't know, but if you are going to, which one? Which scenario? Buy or sell? Forcing, then this situation happened. Buying without even, you see now what's happening? This is what we call the emotional cycle. Oh, see, I'm great without even knowing I bought and it's going up. Then, oh man, I'm very in bad luck. This broker must be deceiving me. Why I'm losing right now? You think all this in a matter of minutes. Because of this, you just opened the position. You didn't think. Before you should have done three things you should do. I have an idea, because of it, I'm going inside the market. This is the first thing. If I don't have an idea, I will not go to the market. If I don't know what to buy or to sell, I will just go play some game. If I want some fun, I will go play some game. This is not a game. And if it's a game, it's a very dangerous game. It can kill your account easily. Easily can kill your account. So first of all, you don't go to the market unless you know why. There's an idea why I'm doing this. The second thing is I need to know if I'm correct, if my idea is right. The sky is not the limit. I have to set up a limit where I will go out with profit. Because if you don't, and this happened, maybe I will just say maybe it happened to a lot of you. You can see your account doubled in profit. and then all this happened like that. Have you seen this before? Yeah, I know, that's happened. This mistakes is real, is actually things that we see every day. So that actually having a big profit is very important, very important. So the second thing, you have to have a take profit. Where I will get out of this trade with profit. I don't want to stay in the trade forever. It's not marriage. This is just a trade. How much time I will spend and how much pips or range of price movement I will take. I have to define a certain price range. Then I will have the third thing that nobody likes, which is the stop loss. And I'll repeat this again. Brothers, if you are not putting a stop loss, you are putting a stop loss you don't know, which is your liquidity. Whatever money you have in the account, this is your stop loss. So if you choose not to put a stop loss, you actually have a stop loss. Actually, and this is off record, like don't use this as a strategy. I know some person who uses his account as a stop loss. Like I want to trade my stop loss with $1,000, I will open an account and put $1,000 and full margin. I'm not crazy, I'm just, my stop loss is $1,000. I'm using this account as a stop loss. I don't want to put a stop loss, the margin call is my stop loss. Some people do this. Okay, so instead of opening the account, I'm putting this $100,000 in the account. He just risks 1% of his account, but he put the whole 1% when use the leverage. Because if your leverage is 1 to 100, you can buy a contract worth of 100,000. If you only have 1,000, you know that, right? You know all of that. You know that, right? The leverage. Okay, so you have to have this stop loss. Three things: idea, why I'm going to this market; idea two, when I will go out with profit; idea three, when I will go out with stop loss. Okay, this trade right now is going to make me crazy because it's in profit. It should be in loss, but it's in profit. It should be a bad example, but okay, actually it.
Wait for 10 minutes, it's gonna come back.
No. What I was going to say is, this is the 1 minute chart. What I was going to say is, even if I win in a trade without these three things, I wouldn't be happy. I'll be just taking chances on real money. We know how hard it is to make money. It's not easy, okay? So you are just it's as if you are throwing the money on the street and saying, if it came back to my pocket, it's my money. Why you do this? You can do better with this money. So if you have these three things and do all the steps, will this guarantee you to win every time? No, but it will make you lose with the right way. You lose in the right way, because you can lose in the bad way, in the not good way. So here, even if I'm winning or losing, that doesn't matter. It matters if it's repeated. Like for example, I have to say this. Some traders say like, it's fine if your stop loss hit one time after time after time. I say no. I think I have like 15 or 16 years as working professionally in this trading. I have never seen an account that have 10 losing trades in a row. I have never seen this. 10 trades, like 10 separated trades, because maybe in the same day you're opening many positions, but it's the same trade. I'm buying gold, so I'm rebuying gold, and then I'm rebuying gold. I'm adding buying gold. I'm selling my wife's jewelry. I'm buying gold. I'm killing my wife. I'm getting my gold. I'm doing everything to buy gold. This is all one trade. This is not multiple trades. But in 10 different days, 10 different trades, oral losing, I didn't see this. Did it happen to any of you in a real or demo account? Did you lose 10 times in a row? Did any one of you? I didn't see it. I think it will never happen. Because actually the statistics of it saying 50%, at least 40% of the time you can be right. At least 20% of the time you can be right. No one is wrong the whole time. Actually, if you are wrong the whole time, you would be very valuable. You know why? If someone every time go to a trade, it's 100% sure it will be a loss. What I would do?
Go against it.
Exactly. So if there is a person, I think there was a movie about something like that, like someone's very in bad luck, they hired him Just to know, if we want to make things bad to our competitors, we will just send him there. For example, if some other company competing us, they will send him here, just sit with them. You will ruin it just by being
Guys,
there.
please take my number. And go
She
again.
can do this. So if you are really losing every time, you are very valuable. What most people do, I'm saying with numbers, not my personal opinion, this is numbers. What most people do is 40 to 60% of their trades they win. But one trade, wipe the whole account. This is the typical scenario. Happened to any of you? Please raise your hand. Come on, raise your hand. My two hands here, okay? This is the situation. You only kill your account, you wipe your account in a single trade. Why you do this? Because you only focus on one of the three things. I have an idea of what will happen in the market. You ignore the other two things, like what will happen, what scenario of profit will I exit this trade, and what scenario of losing I will exit this trade. When someone, even from my friends, ask me, like, showing me his account, like, see what I can do right now. The first thing I see is, what is your stop loss? There is nothing. There is nothing we talk about. Because you are now as if you are showing me your child who having difficulties in the school and saying, what should I do? Man, you get married, you get this boy, you put him in the school, you do everything. Then come now to me. You should have asked from the first, what should I do? This is responsibility of things you have done before. You shouldn't ask now, what should I do? Before you open the position, you should ask why I'm doing this and when I will exit in profit or loss. So this you see now, it's going, yeah, still a little bit losing, but this scenario, actually the USD CAD is one of the slowest moving pairs. So what will happen is, like, you can stay in this trade for weeks and never see like any major or big move, to be still like this. We can just go to something more exciting. What do you like?
Gold.
The yellow eagle. Everybody likes gold. Do you know the truth about gold? What is gold? Do you know?
ULD.
It's a shiny rock. I'm not kidding. This is gold. It's a shiny rock. That's it. What's the difference between gold and silver? What's the difference?
The gold doesn't leave the shine.
The gold what?
Gold never leaves the shine. Gold is only shiny.
Yeah. Actually, gold like never ruined. This is what you mean. It will stay there. Nothing will eat it. Nothing. It will stay there. Actually, silver is the same. Back then, they used to be the same. They used to be like gold and silver. They used to be trading the same. But then we made gold very valuable. Anyway, I'm just saying, like, when you treat gold, treat it like it's a shiny rock. It's not. It's valuable because all people believe in it. But it's actually. You know, of course, how you do this, right? You know how to change this thing from here to here. You know, right? I don't need to go through this. Let me just do it quickly. Here, from here, you go change the candle. How I like black, white, green. Black, white, raise your hand. Green, raise your hand.
Black and white.
Okay, I'll keep black and white. All the men. But green for you. So this is what? This is the gold prices. How much is gold right now?
2918. 2918.
What's the time frame I'm opening right now? What's that?
1 minute.
If a person is trading on this time frame, what we can call him?
Lucky man.
Entry.
It's a scalper. Okay, but it's good also. We can call him like lucky or crazy or.
He's just reaching where he will get his luck cashed.
Okay. So what I meant is, like, when someone is trading on a very, very small time frame, this is scalping, right? What's the first rule for a scalper?
Put a stop loss.
What?
Put a stop loss.
Who said that? You should have a stop loss. Most scalpers, they say, I'll go in a minute or even seconds. The market will not chase me. This is the same story of every crying man or woman that scalp on gold. They call, what? Do you know what they call gold? the Widowmaker. This is actually its name in the market, the Widowmaker. You know why? Because we lose everything. We lose our life because of, I know where gold is going. So, just for each, I'm doing all this. No, I have to make it, yeah, nice for you. That's it. I'm forcing you to reach around to tell me, buy or sell.
Buy.
I'll just buy.
Gold always buy.
I'll just buy. Let me close this other trade, sir.
Now it's going to down.
There is
Long term,
$30
long
in
term.
this trade, okay? That's good. I'll close it now.
Simple.
Khalas, can you withdraw it, please?
Yeah, sure. $20 here for the gentleman, please. Okay, for Richa, let's buy. Okay. We did as the crazy man did. We shouldn't do this. This is a crazy man here who clicked buy and left. So now we are wise persons who are trying to figure out what we should do. Crazy man just clicked buy and left the room. What should we do? First thing is we shouldn't do like him. We should never do like him. We should not like open the, and this happened actually. I saw it, I received phone calls of it, like someone woke up in the night and say, I want to trade. Man, you can wake up, say, I want to eat. I want to travel. I want to have true love. But you don't wake up and say, I want to trade. Because if you do this, you are in the first step on wasting all your money. This never ends well. So, this is a buy. Why did you say buy? Tell me. It's not trend? That's why? Or you because you like gold? Just buy.
Simple.
Okay. You know why most people like gold? With leverage, you can easily double your account like that, or you can like that. That's why people like it. So they don't like gold because it's gold. They like it because the leverage on it, on this chart, it's making it very easy to win very quickly, but also you can lose very quickly. You know what's the lot I'm hoping now on the gold? What's that? What's one? When we see one, this is a standard lot. Standard lot. It used to be like this, like before brokers, like if you are in the 80s or even before, and you go to a bank or any institution and try to buy or sell any currency, they will say, like when you go in the supermarket, there is measures. They're like kilo. Like if you want to buy cheese, there is like a kilo, half a kilo, there is measure. So in the bank, one is the measure. So how much you want, starting from one, which is 100,000. So me and you, going in the bank with $10,000 here, I want to buy. He would say, we don't have this. We only start from 100,000, which is one. For the gold, it's not 100,000. 100,000 in the currencies. In gold, it's, you know what's the price? This price of what?
Ounces.
What's ounce? How we measure ounce?
31.
Yeah.
31 gram.
Of
Gold.
24 carats gold. Because gold comes also in measures 24, 21, 18, 14, like that. So this is 31.1 gram of 24 gold, which is the highest of gold measures. So this is 31. Meaning what? Before you trade, you have to know that this, if you are trying to buy a gift for your partner, golden, you can know the prices in the store from here. You know that? How? You calculate it, you divide this by 31.1. This is the dollar price for 1 gram of 24 carats. If you want to buy something which is 21, is it in India 21? What's tradable one? 18, 21, which one?
22.
22. So you want the 22. You have the 24, you multiply it by 22 and divide it by 24. This is what when you are in the store, how much you want, say, I want this ring, okay. This is what he's doing. He's dividing this by 31.1, then multiplying it with the thing you want, 22, 21, or 18, then dividing it again by 24. Meaning, before you start your trading, you never think that there is a broker can deceive you. I'm not saying that they don't want to, but they can't. This is a price everyone can see in the whole world. For example, if I sold now and got my stop loss 25. 2,925. This is my stop loss. And I have $100,000 in my account. A broker, for example, an unregulated broker, like some scam, he want to take my money. So he want to, for some reason, he have a white label MT4. You know what's that? He's just showing you prices. He's not actually executing for you. So he want to move this from here to here. He cannot. He cannot. Even a bad person with bad intention, with bad company, he cannot do it. He cannot push the gold price to here. This $4. He cannot do it. So I want to take out of your mind that this broker or this firm is your enemy. You have enemy. You have one enemy. You have only one enemy. Who is that? Huh? Say it. Huh? Who?
Myself.
Who is your enemy in the market? I don't have an enemy. I'm a beast man. Just leave me in peace. Who said an enemy? You said something. Who's your enemy? Don't think. Just say. Who's your enemy?
Heart.
Yeah. Who's your enemy?
Greed.
Greed. Okay. Your only enemy in this market is this.
Lord side.
This represents the leverage. This represents how much you can buy or sell, which greed is here. When you have greed, you maximize this number. Your hand actually is here. Your hand goes there. So actually, everything you said was correct. Your hand, your greed, yourself, all of this lead you to go here. This is your real enemy. Meaning, if this thing is not there, if you don't have the ability, let me show you something. Let me try to open. Okay, I was just about to tell you. This one equals to 100 ounce. 100 ounce. So the 1 ounce price is this. $2,918. If you go now to any shop in Dubai Mall or anywhere, say, hey, Assalamu alaikum, sir, I want to buy an ounce of gold. He would say, sir, the pure gold price is $2,918 and then plus tax and plus. So this is one, means you are buying 100 ounce. 100 ounce. So if this move $1, how much you move with it? $100. So if I now change this to, instead of 1, make it 10. You know how much I will move with the $1 of gold? $1,000. While we speak right now, how much the dollar was moving? We bought on 1955. It's now almost the same price, right?
Yeah, almost.
Yeah, it can easily move dollar or two above or below, right?
Yeah.
So if I click that 10, if I try to buy, you see here the difference? Can you see it?
Yeah.
Can you see my screen?
Yeah.
Can you see the difference? This is the difference between just the lot size. This is the account now has around $7,000. Why do the examples are ruling right now? Why they are winning every time? Anyway, it should not be like this. It should be the 10 equals to $1,000 per dollar. Per dollar. Each dollar that moves in gold prices move me $1,000. Meaning $7 in gold can make me double my account. That's why people like gold, because of this leverage thing. But actually, what can easily happen is this, what you can see right now, in a normal move of gold, it's already losing around $300. And if, for some reason, for some news, if for some happening, the gold move against me only $7, what will happen to this account? It will be wiped. Like that. Like that. Nobody will notice that I'm crying. Nobody. Also, if I'm winning, nobody will notice. Okay? So I want to take out of your mind that there is any enemy. The only enemy here, and I want you to keep this in mind. I want to plant this in your mind. This is your enemy. Whenever you are doing any trade, buy or sell, like Mr. here said, your hand is your enemy, your greed is your enemy. They are all pushing you, yourself, they are pushing you to see what's the maximum leverage I can use. In the US, there is a law that they can't use more than 30 to 1 leverage. You know why? Because more than this is very dangerous. The car manufacturers like Lamborghini and these things give you a car that can go 400 and even more kilometer per hour. Can you sue them for doing this if you have, God forbid, an accident? No. They give you this because you asked for it and you paid for it, but they don't tell you or push you to use the full capacity of the car. So the company, any company, give you a leverage. Whenever someone, for some reason, I get a call for a person, and he asks me what's the maximum leverage you can offer, I say, now I have to end this conversation. You are asking me how to kill myself. I will never help you on this. Most brokers give up to 400. This is the normal. Some people go to 2,000. It used to be like the less is the better, but for some reason now people like the excitement, the adrenaline. So what I want you, I keep you to with this gold trade, which is sadly going in profit. You never risk everything for one trade because you don't know. Nobody knows. You need to do the things, you need to know the fundamentals, as we said. We need to know the technicals. You have to have a strategy, and you have to have the 3 steps. Okay, I know the fundamentals. I don't use them, but I know them. I know the fundamentals. I know what's happening in the market. I know the technicals, what's happening in the chart. I understand. If you open the chart and you don't understand what's happening, just don't trade. Don't trade. Leave it. Not because it's gold, I have to trade. Actually, some strategies work very good in other pairs. I have strategies that have like 70% success rate on a bound dollar there. When you apply to the gold, it actually loses 80% of the time. It's like the opposite, the complete opposite. Because the commodities and the currencies not all moving the same. The US dollar against CAD, for example, I told you it's very lazy pair. The gold is very active. You need to have, actually, today in the morning, there was some long trade, which is buying. I don't want to have the one back. Long trade from here. No, I want to have our chart. Yeah. Yeah. Who's here? I swear to you, this is not made up. This is happened in the morning. Someone opened a trade here. Buy gold from here. Stop loss was here. Was here. This man, some hours ago, called me. I'm not saying crying, but very sad. What happened to this man? He said, now buy from here. I stop loss. This candle was not here yet. He bought from here. This is actually the first candle in the early morning, 4 a.m. I think. So he said like, this is the level that the gold couldn't break. Can you see my screen clear? The gold couldn't break this level. So I'll buy from here. I bought my stop a little bit, like here. What happened is gold just hit his stop loss and left. His direction is actually would be like, I think it was around 2,900 his buy position. So he would be now $20 in profit. You know what's the stop loss he used? How much was it? Around $9. After like some crying, I asked him, where is your take profit? Where was your take profit? You know what he said? 25. This story I'm telling because I want to make some balance. I'm giving you all this information about risk management, stop loss and everything. But sometimes you don't need to have your stop loss very tight. Because the same situation, the same story I told you about can happen easily to you. When you have a technical stop loss like this, here is the level, right? Did he consider this one? Can you see this wick? He didn't consider it. This is what I told him. I told him, you bought a stop loss because you didn't want to lose the $9. That's it. But you didn't listen to the market. The market actually was here and was here the day before. This should be your stop loss. And your stop loss here would be from this level around $25. This would be a one-to-one trade. You got my point? I'm not saying put a $25 stop loss on gold. I'm not saying this. But I'm saying is, before you put a stop loss or a take profit, understand the scenarios. If I put my stop loss here, I can know that easily market can hit it. Because here, hours ago, market was here. The market actually was below this level. And if my take profit is actually $25, why you are so tight in your stop loss? If he made this stop loss $12 instead of $9, he wouldn't have all this scenario. Okay. So, the other thing, the second thing is, you started your trading in the very, very early morning. Some times of market, I'm not saying avoid, but consider that this time are not stable. When the market are open, just open. This is the first candle actually for the market.
Morning also 6 to 7 little dividend.
Okay. Gold stopped trading for 1 hour from 2 to 3 a.m. Dubai time and continue after that from 3 a.m. Okay. This is the 3 a.m. candle. This was just I'm not sure if this is 100% correct, but this candle actually went like this and then went up and moved in very slow moves. This was just the opening of the market. The opening of the market always makes things like this. It makes gaps, for example. So you should consider this. You should consider your time frame. What I'm using. Am I scalping? If I'm scalping, I wouldn't stay in a trade more than 2 or 3 hours. But if I'm in profit and I have my stop loss on a break-even point, I can. Who knows here what's a break-even point in a stop loss? You know, everybody knows. Do you know, sir, what's a stop loss? You know?
Yeah.
Okay. So, for example, now I can apply it. This crazy guy who made the dollar, gold trade was here. So we bought this around 2,919.85. So I will make it a break even right now. 2,922. That's a break even or even a little bit higher. Let me close the. See the other one, the small one also in profit. Let me keep this so you can see. This is what above break-even point stop loss, meaning my stop loss actually is profit. What I do right now is I can go to sleep, and I'm sure that my stop loss or my trade will not lose more than actually a small profit. Okay, so this is other things you should consider while having a trade. You have to have an idea why I'm doing this. Then I have a take profit and I have a stop loss, and you do not put all the money on the table and just leave. You like it, right? Yeah. Thank Richard, not me. Thank Richard. I wouldn't agree if I don't want to buy gold. So you shouldn't leave what they say. Don't leave all the money on the table. Right now, what's happening is that gold is going in my direction. I'm in profit around 2,000, but in a minute I can lose everything. So what can I do? I can keep it like this. If I have, that guy will kill himself. It's around 25 already.
I will sell from 25 actually.
Yeah. I can also move my stop loss. You see what I'm doing right here? You see it? I'm putting it below the wick. What I'm doing right now is trailing stop. Raise your hand if you don't know what is a trailing stop.
Yes.
Trailing stop is when you can do it automatically or manually. I did it now manually with my hand. Trailing stop is when I'm moving my stop loss with the market. I'm not moving it to the money I like, I'm moving it with the market. This is the wick of this candle, so this for me is the support. So technically, I believe if the trend is going up, I will still going up with him, so he shouldn't break this candle. That's why I put my stop loss here. So the worst case scenario for me right now, the worst case is to win around $2, which is around like 1,000 something with this lot size, which is very big. Shouldn't do like that. See when you see the margin like this. See, it's like most of the account margin is taken. You shouldn't do like this. Okay? You shouldn't do like this. But even if you do, you saw what I did right now? You can do one crazy decision. You shouldn't have two decisions. Okay? The crazy man opened this position and left. Okay, the wise man should take over. Should bought a stop loss, and if it's a very big position like this, the first thing I do, if I'm in very small profit, I bought a break-even stop loss. Then if the market is going like this is around 2,921 right now. This candle here, some people actually take out their stop loss. They will say no, gold will go more. What I should say right now? What I should say? Is it good or bad trade? What happened? It's already closed. This is good or bad? This is a very bad trade. With a lot of money, but this is a very bad trade. Because most of the things I did after the trade, I should have done all this before the trade. I should have set my volume, this where the devil live here. I should have decreased this. I should have put my stop loss and take profit initially like that. You see what I did? Do you know how to open just with one click? Do you know how?
Yeah.
I hope you don't. Don't do this. Don't do this. Don't ever do this. Okay? If this is enabled, disable it. Like this is crazy. Don't do this. But just in case you are crazy like me and you do like this, first thing you go after you open, you go to the stop loss. You try to logically put a stop loss whenever, like that. You see? Yeah, that's good. Now, yeah, just lose some. Go. This is what your account will look like when you trade without a stop loss. Yeah, I know. Because you are not having it yet. So the process of it, you should do it. Here. This is actually a bad stop loss. You know why? Can someone tell me why? This is a very bad stop loss. Because the price already touched it before. This is what time frame? This is a 1 minute time frame. 10 minutes ago, price was here. Actually, my stop loss technically should be like below, like this. Or it should be above here, like this. But now I can move it there, it will just hit it. This is the stop loss you should do technically if you just scalping. Is there a difference if I didn't tell you or show you the time frame? If this is a 4 hours time frame or a daily time frame, will it change the analysis we are making? It will only change the time frame of the candles generated. So the only good thing about a 1 minute chart, it will be just fast. So that's why actually I'm using it right now, because I wanted fast results, good or bad, to show you. That's why I'm having a 1 minute chart. So the first thing you should do with the 1 minute chart is you don't use it. You never use it. You can use it if you want as a scalper, but you should first start with we call this, and I will end with this. We call this the eagle eye view. You know how eagle hunts? The eagle in a very high level in the sky, very high, you cannot even see it. It have a vision of everything, big vision of everything. Then it go to an area and have a vision for this area. Then in this area, it go a little bit closer. Then it go to the lake. Then it go to a certain fish. It doesn't go like this and take chances. There is a certain fish I'm going to. I'm going only to get this fish, go to get it or not. So it goes directly to the fish, take it and leave. This is the eagle eye view. You should do like this when you trade. You start with what's the highest time frame in the MT4? 1 month, right? So you go with the 1 month. What's the trend of the gold? The weekly. What's the trend of the gold? The daily. The 4 hours. The 1 hour. Still up? The 30 minutes. The 15 minutes. The 5 minutes. The 1 minute.
No.
Okay. Back to the 5 minutes. Still up, huh? If someone come to me right now, come to all of us right now and say, man, gold is going very high, I should sell. What the first thing we should tell to him, say to this guy?
Follow the trend.
We should say to him that the trend is very strong. Monthly trend, weekly trend. I'm not saying don't do it, but you are in front of a trend. So you can easily get hit. So following the trend is actually good advice. It's a very good advice. Or at least considering the trend. Consider the trend. There is this, I don't know why everybody likes to use the RSI and think that whenever the market is going up for so much time, it has to go down.
It depends
Yeah.
how I prefer to trade. If I'm day trader, swing trader, scalper, so it depends how I trade.
Great, that's great. Exactly. Yeah.
So if I'm a scalper, so I can follow the candle.
Yeah. I can also bet against the trend. It can reverse, right? But what I'm trying to say is, do you see here the RSI?
Mhm.
Where it was? It was very high. This is the starting of the uptrend in this frame. This is the 4 hours frame. So people here didn't see this, didn't see all this. They saw the prices here moving in a very small candles. So this can be a high and a reversal of the trend, right? Sometimes it happens. Actually, sometimes it happens. But there is no guarantee that a continuous trend for a long time will 100% reverse or at least make some correction. Because people like to this idea, like if the trend is going up for so long time, it has to go down. Does this mean I don't sell in an uptrend? No, I can sell. I can easily sell in an uptrend. I just put my stop loss logically. Like if I want to sell here, like, let's close this. We made a lot of money. Let's just sell. Okay. My logical stop loss, where should it be? Huh? 25. Okay. The man will kill you if he hear you. 25 was his target. Okay, so it should be 2, 9, 25. Right? This should be my stop loss. It's not showing here because the price is around, so let me look with 5 minutes. See, this is the 1 hour. See the 25 is for a very long time. It was very far from the price. Now we're closing to it, but this is a stop loss. Where my take profit should be. This is a 1 hour frame.
1 hour.
Yeah. Where should my take profit be?
This is selling, huh?
42.
12.
You're selling, right?
Yeah, I'm selling. Yeah. The stop loss is there already. I sold from there around 2,920. Where my stop loss should be? 2,925. Where my take profit should be?
1, 2, 3, 4.
2,900.
Okay, how do you say it, please?
The closing pip, the closing price of number 4.
This one?
Yeah, the closing price of it.
Okay. This is
Up.
here.
Closing price.
Closing price. Oh, okay. Here,
Yeah.
right? Okay. So this should be 2,911.38, which will be $9 or $8 from the,
The point and the point.
right? This is your take profit there. Why? You have to tell me why. you had something in your mind. I'm just asking about the
Yeah, because this is a strong sport there.
a what?
Sport. There's a sport of the 4 hours.
Okay. So, whatever you said, this is an idea of the
Yeah.
take profit. So you have to have an idea why. I'm asking to put my take profit here, my stop loss here. You don't just put, I want to risk $5 and gain $10. Because some people do this mistake. I have to have 2-to-1 ratio. Sometimes market does not give you 2-to-1. Sometimes market can give you 5-to-1. You should ask the market where my take profit and my stop loss be. You shouldn't ask your mind. You should ask the market where my stop loss will be. So this was like an example for selling in the uptrend. I can sell, but I need to have a reasonable stop loss and take profit. What do you think? This is a stop loss and take profit reasonable? Can you change it? Tell me, where should my stop loss and take profit be?
Yeah.
Should be like where?
If we sell it,
We are already sold. We are already sold. We are at the position open from here, 2,920.
okay.
The stop loss is 25. Where should my take profit be, or should I change my stop loss?
Okay, 25. If your stop loss 25, so what's the price now? Let me check because I can.
22. 2,922.
22.
Are you satisfied with the stop loss? 2,925.
25.
It's very near now.
Yeah.
Very near now.
Yeah, but
It was not like this $2 ago.
yeah, just.
I'm saying $2 because we are here. We're
Maybe
not
28 for stop loss.
28?
Yeah.
Okay.
Should be better or 27.
Okay.
Yeah, and take profit should be.
Then I made the stop loss 27.
Yeah, maybe take profit 909.
2009 and 0. Here?
Yeah.
Okay.
2913.
Who said? So here, the stop loss, here is the take profit. So this is, now we are not judging the trade because we don't know. But this is a good stop loss to take profit ratio. Okay? You also have your take profit in a reasonable place. You have your stop loss far from here, but very near for a week here. If I'm in your place, what I would do, I wouldn't do anything better than what you did. It's great. It's very good. You shouldn't if you follow the market, you will always raise your stop loss. You should just consider the very time you are trading, as you say. Like if I'm trading one day, it's different from my trading 1 minute. It's very different. So this is the 1 hour time frame. This is almost the 2 or 3 days worth of data. I don't need my stop loss to be above all this. And considering I'm in an uptrend, this is what I should consider also when I'm putting my stop loss. I should assume that if the trend is strong, I shouldn't be in this trade. I should go out. Because my main idea is this will reverse. If it's not reversing, I should be out. So whenever you have the idea of a trade, you have to have the price when I will go out, when I will escape from this battle. This is actually, if you have read about any the art of war or any book about like war strategies, any leader, whatever he's doing, he has to have an escape plan. What I would do if I'm losing. If you don't have this plan, you don't have a plan. So you do everything to win, but you need to know what will you do if you lose. What will you do if the other army is pushing you? How you will retreat. So you need to know, okay, I'm selling, I can sell, gold can go down, but when I will admit to the market that I don't want to lose more. When? Before the trade starts. Because what we did wrong right now is we are starting to put the stop loss after the trade is already happening. When the trade is already in the market, I can guarantee you that most of the time you will wish that market go in your direction. You will not see what's happening in the market. You will just wish. Before the trade, you can see. Even if you want to sell, for example, you can see it's still going up. But if you just sell everything you see, even the green candle, you will figure that this is just signs of the ending of the uptrend. Your mind will just search for signals that my decision was right, was correct. But before the trade, you should just, okay, if I'm right, this is where I go out. If I'm wrong, this is where I go out. And then leave that trade. You can use the trailing stop as we did if it's a very big position in a very long time frame. Because like you don't leave the trade in weeks without like monitoring it. But with a scalping trade or a 1 hour trade, if you move your stop loss every minute, or if you take out your stop loss because you say, price is going right now to my stop loss, I'll just take it out for some time and then, when you do this, you are just putting another stop loss. The whole account. The whole account. So just live to trade another day. That's the sell scenario for the, I wish the sell was actually in profit. I don't have any like relationship with selling or buying right now. I wish it would, but it's fine. We already have the buying and selling opportunities. Okay, so this live session, we did what you should do and what you shouldn't do. Before you trade, let me like summarize this so I leave you with practical steps. Now, I open my laptop or phone or whatever. Actually, you shouldn't trade on your phone, with respect. I can follow my trade on phone, but I shouldn't. Okay, this is a preference. Everyone have different views, but I think in the screen, in the like using all the technical indicators and everything, and even if you just use the candles, I think the screen, the computer screen or the PC screen or the laptop screen is far better than the mobile. You can follow on the mobile. But I don't recommend trading, like initiating a trading idea from the phone. From my experience, like from my humble opinion, this is very personal, no right or wrong with this. You can initiate and do whatever you want. Or you can do something else. You can have a strategy in your mind and apply it on the phone. For example, this is just an example, okay? I use the 21 moving average to make my decisions on what should I do. So I will just put the moving average, the 21 moving average, and whatever the price is doing, above I buy, below I sell. And I put my stop loss below if I'm buying and above if I'm selling. This is my strategy, for example. I can apply this on the phone because I don't need, I already have the idea. I know what I'm doing. I know where is the highs and lows and everything. So I can apply this on the phone. I don't have the ability to open my laptop, for example, or trade on it. I just have the phone, so I can do this for it. But complete analysis on the phone, I don't recommend. Anyway, so you just open your device, you are planning, you do the three things. The three things is, you know the idea, how you get in the market, and you know where you go out with profit and where you go out with loss. The first thing, which is how you get the idea, you know the fundamentals. What is happening in the market now? You have a calendar everywhere. You have calendar in Gold website. You have calendar in the AA Forex Factory Trading View. Everywhere you have a calendar, you know, with all languages, with your own language. You find the calendar, know the fundamentals. Before you place a trade, please know what's happening in the market. Yesterday, there was a day off in the US and other markets. If you don't know this, you would expect or wait for volatility. Yesterday, actually, the market was very choppy. You see this move? You see this move in the gold? It was very, very few moves because of the day off. Huh?
Market was closed.
Market was closed. So we know the fundamentals?
Bank holiday.
Yeah, bank holiday, exactly. So we are now having the fundamentals. We know the fundamentals. And I have my strategy. Is it technical? Is it indicator, RSI, Bollinger Bands, whatever, just the candles, I can use the candles only, whatever I'm having a strategy, and with the fundamentals and technicals, I'm managing my risk. This is all in the point number one. This is the idea, how I'm getting into the market. I want to get in the market. I want to get into the market. Three things, no fundamentals, no technicals, risk management. I did all this, and now I'm entering the market. Where I will go out, I have to decide this before I start the trade. Where I will go out. So whenever you come to me or to any person, a friend, a fellow trader, see, this is my trade. The first question is buy or sell this instrument or share or whatever. The second question is where I'm getting out. This is two options. Where I'm getting out in profit, where I'm getting out in loss. And with the subcategory in this loss, I'm going to trade my stop or move it at all, or I just leave it, stop or take profit. This very, very small steps can just guarantee you 90% of traders doesn't do this. And that's why they lose. This will guarantee you either win or lose in the right way, that protect you to trade another day. I'm now open to your questions. If someone have a question, check. What time is it? We're already finished, right?
6:30.
Okay.
We
So,
have some time.
How do you enter into the trade?
other than what I just told you, all these things, I understand your question. I can tell you like my personal preference. I choose not to follow all the markets. This is my personal choice. I can follow all the market, but I choose not to. I follow very specific number of markets. And I have a personal strategy that have a very, very simple conditions to get into a trade. I don't assume at all that I'm smart or I know where the market is going. I just assume that there is this very small edge in this strategy that like more than 50% of the time it works. I use this strategy with a pair or a commodity that I like, mostly like gold or pound or dollar yen. This is mostly what I trade on. And the shares, I choose shares like very tradable shares like Tesla, Apple. I don't go to like very limited, even local shares. I don't like trading them because it has a lot of fundamentals that I don't know. So I mainly use very limited markets that I know. And also, other than this, I follow every major interest rate decision. This is like personal, okay? This is off record. Most of the profit I made was on a trading pairs that I don't usually follow. I don't know what is that even. For example, there is the euro yen, for example. This I don't trade usually. But for some reason there was some interest rate decision on the yen before. Did you follow that? All the central banks were decreasing the interest rate. The only bank that was thinking about increasing the interest rate was the Bank of Japan. This is fundamental. I know you don't like the fundamentals, but just let me tell you how powerful fundamentals is. When you have a fundamental decision like interest rate, no indicator can predict what will happen. The RSI will give you very high reading. The stochastic, the moving average, everything will tell you to sell while it's continuously going up. I saw with my own eyes. The dollar yen against the dollar against the Japanese yen around 97, 98 area. A lot of fellow respectful analysts was saying like how it could break the 100. It can never break the 100 because the RSI, the moving average, I saw with my own eyes. This is like years ago, maybe around 2014 or something. I saw with my own eyes from 90 to 102 in a matter of seconds. You know why this volatility happened this day? Because there were major stop losses in this area. Not you and me. Very high liquidity, not you and me, not brokers. There was like central banks betting that the dollar yen rate will never break the 100. So when it broke with the BEP, it went 200 pips because of the whole liquidity. This is a very wise word. The stop loss for a market is a liquidity. It's an order. You know what the automated says? I started my study with the stocks. When you start with stocks, you understand the mechanism, the real mechanism of the market. What you see here is it doesn't tell you why the market is moving up or down. It's taking orders. It's the system that had buy, sell, buy, sell, buy, sell, 100, 100, 100, 100. You know what the system do in the stock market? In everywhere, the gold, the currency, everywhere. It goes to the highest volume of execution. It's a system. It doesn't have a feeling. I want to, the system have this specification. I want to execute the largest number of orders. I have all these orders. Sell, buy, sell, buy, sell. I want to execute the max I can. If I can all, okay. If it's not, what's the price that can get me the max? 90%, 80%. That's why it moves like this.
How will you identify the maximum number of the volume for the liquidity? This is the point.
Okay. We have, to be honest, we have very limited data of that. Some, they call it insiders. Like if you are in a politically exposed person, for example, in the Fed or in a central bank, you are not allowed to trade in certain times. You know that? By law. You know why?
Conflict of interest.
This conflict of interest easily meaning you cannot lose.
Yeah.
You can never lose. So if I have the answer for your question, I would never be allowed to tell you, to be honest. But that's why I like technicals, like you. I can see in the chart things that I don't know, but I see the steps of those who know. For example, I know that for some reason 2,942 with gold was a very, very unique price. I don't know why. I don't know who controlled this.
When?
2,942. This was like a week ago.
Okay, that's
Oh, let me show it to you. This is it. Here, can you see it?
yeah.
This is what time frame, you know?
Yeah.
This is the 4 hours time frame.
Yeah.
Can you see these two candles?
Yeah.
I don't know the people, I don't know the reasons, but I know these candles cannot be done by you and me.
Yeah.
This only done by central banks, by major economies, like when central banks buy gold or sell gold, this happened in the market.
Let's talk about this candle.
Okay,
The very first one.
yeah, this one?
Okay.
Uh,
Let's say we are not doing any deal yet. We
Okay.
did not open any deal.
Yeah,
That certain small candle happens.
this one.
Yeah.
Okay,
Okay. What should we do?
we should buy. We should put our stop loss here. You're asking me before these candles. We don't know, right?
Yes, we don't know.
The wise trade, always to be with the trend. Is it guaranteed? Never. But I told you that my stop loss will be here, right? Me personally, I have a strategy that I call it the double entry. This is how I call it. The double entry is my stop loss is an entry for the second trade. Here I don't know what the market will do. Here I don't know what happened. I told you, I assume I'm not smart. I assume I don't know anything. I just know I have a little edge on the market. This little edge say to me like follow the trend. So I will follow the trend. I will buy. This is my stop loss here. Because this is a very major area, this is all time high until now. I didn't see this. For me, this is all time high. This is all time high. Again, it was broken. Or about to be broken. When I'm here, there is only two possibilities. It either break it or fail to break it. There is no choppy move. And if you see a choppy move around very high, this is no move. This is not a move yet. The market did not respond to the price yet. When a price like this is hit, it either break it very hard or fail very hard. So you have one of the options, buy or sell, and nothing guarantee what will happen. But if you for some reason choose to follow the trend and bought from here, you should never bought your stop loss here. You should do it on the very last candle. The strategy I follow, and in the very major moves like this and very major moves like this, most of the time it works. I say most of the time it works. Is whenever there's a big move like this and break a level like this, it doesn't give you so much time before it reverses. So I can easily get another trade just by hitting my stop loss.
What is your strategy now at this point?
Okay, my strategy now for today was to buy above 2,900 with a take profit of 2,925. This is my strategy for today. If you ask me tomorrow, I will give you another price. Why? I'm using a day-by-day analysis. I know the big trend is going up. I know. But I'm not marrying gold. I'm not buying gold every day. I buy gold as long as gold is giving me signals that's still going up strongly. Meaning, like in a day like this, I will not buy gold from here actually. I would never buy gold from
Yeah.
when it was because this was actually the same like this one. I would never buy from. I would wait for this to close and even the other one and buy from here. Okay? If you ask me right now, actually we are in the very end of the day, very near from the take profit, I would assume. Me honestly, whenever we're approaching all-time high for a third time, I buy. This is personal preferences. Nothing guaranteed, but from my experience, 3 times reaching all-time high,
Right.
from my experience. And from my experience, this happens very fast. If I'm in profit, it will not take time. Just
I'll tell you what's the pricing thing which I discovered last week. If you open the weekly chart, and this is crazy, I was not even believing myself. Open the weekly chart. Now, where is it? Yeah,
let me cross this to just.
yeah. It's all right.
Yeah.
Now go to August 1st, 2011.
Okay. August.
August 1st, 2011. Now you have to zoom out.
Here.
Is it August 1st?
Uh,
It's 2011, I said.
2011.
2011.
11. Oh,
When it was all-time high last time.
2011.
Well, back. Still,
Still back.
yeah,
Okay.
that's it. You see that the high peak? Is it 11 now?
No, not yet. Let me go to the monthly.
That's the peak one.
Yeah.
First, the highest,
2011.
the high.
This one.
Yeah, the first high. Yeah, here. Okay. Can you just zoom in and show us?
Yeah. Let me get something. Sorry.
Okay. Can you go to the weekly now?
Yes.
Can you bring it back?